5% GDP growth, inflation fading, rate cuts on the table. Wall Street is buzzing, Washington is smiling, and some are calling it economic nirvana. But is this the real deal or just a perfect moment in time? Welcome back to Navalier Market Buzz. Dad, congratulations for calling 5% GDP growth on Maria's show.
They're also entering the new year, which is expected to be strong. What is your assessment of the macro story? How do you want to be invested in 2026 Louis?
Well, we're going to hit 5% GDP growth. Okay.
Are you serious? What?
Yeah. Well, we're running 3.5 to 3.8 now, but they're going to be revising it up because the trade numbers, the trade deficit's the lowest in 5 years. The exports the second highest ever recorded with low oil prices. So that's going to big upward revisions. Obviously, a lot of the growth was onshoring, but even and the data centers. But if you look at the data centers, their order backlogs are up 20% quarter over quarter. So we're going to enter the new year with we're going to hit 5% GDP growth, and it's not inflationary. There's deflationary forces all around the world. We import deflation from China. Real estate prices are still very soft. Rentals are down the last 4 months. We want to see what the owner's equivalent rent is in the CPI tomorrow, but I think we are getting close to deflation, and if every economist is trying to fight that, so we got to lower rates a lot.
I got to underline what you just said. You're expecting the GDP to show 5% growth. Yeah. That is a big deal, Louis. If we see 5% growth in 2026, you got to expect that markets react to that as well, right?
Oh, yeah. And what President Trump has to do, he has to cheer everybody up. He has to run around. And, you know, in the State of the Union, he may offer $2,000 to low and middle income people from the tariffs. But they have a great economic team. Scott Bassett is phenomenal. I love Howard Lutnick. I know him personally. And Kevin Hastert's great. So, I mean, we just have three great cheerleaders for America. And it's just time to be happy and celebrate what.
She repeated that prediction on Jesse Watters just ahead of President Trump's address. When you heard the president say the best is yet to come, did you feel that the data is finally caught up with your outlook?
Well, this is a very interesting conundrum we're in. I have noticed the news media is incredibly negative, and it's probably because the midterm elections are coming up, and they probably don't want to give any credit to President Trump for his economic policies. But the truth of the matter is you can't have $18 trillion of onshoring and not have it have a positive impact on America. So yeah, I'm extremely bullish. Obviously, the Fed is now joining the party, continue to cut rates. So we have a lot to look forward to in the new year.
Some of the media are suggesting that the CPI report was missing key details. Do they have a legitimate argument, or is this just a narrative-driven skepticism?
I think it's narrative-driven, but in their defense, there's a Bureau of Labor Statistics report on the CPI that you're showing now, and it shows that some categories for October, November were blank. So what they're insinuating is they didn't have the data, so they didn't count it, so therefore inflation fell. So that's an interesting insinuation. The problem is, we showed on last week's episode of Market Buzz how rents have fallen for 4 straight months. In the 5th month, it was flat. We showed that housing prices have peaked out. So there is deflation out there in housing, and the housing inflation was largely causing the CPI to jump. Of course, we have the lowest oil prices in 5 years. That's deflationary, and we're importing deflation from China. So there's just no inflationary pressure right now. And I think the central bankers better be careful, because if deflation shows up like it is in China, their choices are very, very limited. China will have to have a currency devaluation. Their rates are already lower than Japan. They can't lower rates further. So a currency devaluation is the only thing they can do to stabilize prices. And we don't want to get in that conundrum ourselves. I think the Fed's going to have to cut a lot, and we'll see who our next Fed chairman is in the new year, and we'll take our guidance from him.
Now, the Fed Governor Christopher Waller just met with President Trump and is openly calling for a 1% in rate cuts. Does that stance put him in serious contention to become the next Fed chair?
Well, after President Trump met with Christopher Waller, he praised him. And I think President Trump is running this Fed chairman selection kind of like the Apprentice show. And he's trying to keep the Fed chairman in the news. He's also trying to get more people to view things his way. But Christopher Waller's a very serious man. He saw the decline in U.S. labor markets before the Labor Department did. He went on Bloomberg TV and predicted that. He's a very serious guy. And the fact that he would like rates to be 100 basis points lower than they are today is just wonderful. I'm sure President Trump would like him to be 200 basis points lower. So we'll see who the chairman is going to be eventually. I still think Kevin Hassett has the lead. After him, it's Kevin Warsh or Christopher Waller. So, but all those people are very qualified.
And this isn't just a U.S. story. Britain and Mexico both cut key interest rates last week. Is this beginning of a broader global easing cycle? And what does that mean for the U.S. markets?
Yeah, the European Central Bank led the easing cycle. They didn't cut this week, but their rates are a lot lower than everybody else. Okay. And they don't really have deflation because, in their defense, Europe is just so darn old. When an economy gets old and your households are shrinking, you just don't grow. Okay? But the rest of the world is right behind Europe, and we're probably going to be the last country to significantly cut rates. But yeah, the rate cuts in Mexico and Britain were welcome. Now, Britain was interesting. That was a 5-4 vote, and so that was a lot more closely contested. But the people on the board of the Bank of England don't seem to ever agree anyway. But their economy is now tipping into recession. So I think that there's probably more cuts coming.
So with rates easing and inflation cooling, investors are asking one big end of the year question. Is tax loss selling finally behind us? And is this the Santa Claus rally back on track?
Oh, yeah. Oh, my God. The reversal on Thursday and today, which is Friday, is unbelievable. And, stocks that were getting hit on tax selling, some of them are reversed or more in under 2 days. The last 10 days of December are seasonally strong. The volatility we had in the markets in previous days were just tax selling. So it's lock and load time. It's time to be bullish on America. My only caveat is Bernie Sanders did come out and call to stop the data center expansion. He didn't like the fact that the data center and AI makes a lot of the billionaires we have leading our tech companies extra rich. And he didn't think it helped working families and things. But I don't think anybody's going to take Bernie Sanders seriously on that front.
Our friends at Bespoke flagged a shocking anomaly in the Ethereum ETF, suggesting it's only profitable after hours. What's going on here?
Yeah, it is also shocking. And when I was going through LaGuardia Airport, I saw nothing but advertisements for grayscale crypto ETFs as well. What is going on is this ETF is run by iShares, which is an extremely respected firm. And if you bought it at the close and sold at the opening, you are up over 115%. But if you bought at the opening and sold at the close every day, you're down 61+%. And then if you bought and held it, you're down about 14% when Bespoke did that report. It got weaker in subsequent days, so I think it's more like 20% now. So this shows you that there is a mandate to basically make crypto easier to trade. But based on that report from Bespoke, it's the ETFs are not the solution. They're actually part of the problem. So this is a good reminder for everyone. When you go to buy an ETF, go to Morningstar.com, and we're showing you a sample here. And there's a thing called intraday indicative value. And if the intraday indicative value is very close to the quote, then you can buy it. But sometimes it's nowhere near it, and that's the problem. So in general, ETF spreads tend to be tight at the opening, tight at the close, but during the middle of the day, you can drive a truck through them. And, I've been explaining to clients, because we have all this profit taking and tax selling, that markets are not liquid. And there are windows when you can buy and sell. And if you try to sell in one of these illiquid periods, it's devastating, even on stocks. So you have to wait to buy and sell. And what an ETF does, it puts a spread on something that already has a spread. And it's like anything in life. Sometimes it works, sometimes it doesn't. But this is very disappointing. And one last comment I have is Wall Street makes money on spreads. And there's a lot more money in spreads than management fees. So in the old days, they used to push pod ETFs or marijuana ETFs. And some of those ETFs had 20% spreads. You just got to realize that when they create these products for you, they can make a lot of money on spreads. And so I'm very disappointed that the crypto ETFs are not being officially traded at this moment. Hopefully they'll get a lot better. President Trump's family announced their own crypto ETFs. I'm sure they'll be furious if they don't get good pricing. So let's hope the markets get a lot better.
Now for the holidays, let's give our subscribers something special. The best A-rated stocks to buy this week. Dad, let's start out with the first one.
Yes, all these stocks have very strong forecasted sales and earnings. Palantir is the AI leader. PLTR, it is a screaming buy. It's also a fundamental A stock. Another one is HSAI, which is LiDAR. It's a Chinese company. They build the LiDAR systems for our vehicles. All the vehicles are now coming with self-driving modes, and that's the LiDAR system. Very valuable. It'll also help you see animals at night if you live in an area where you have that risk. Wilden Group, WLDN, is basically an energy engineering and grid company, and they're booming with all the data center expansions. Another one is Comfort Systems, FIX. That's commercial air conditioning, and they do a lot of the air conditioning in the data centers. Great stock. Celestica, CLS, is a supply chain expert, and they are also benefiting from the cloud boom. So they're doing exceptionally well. Bloom Energy is probably the most controversial. So when Oracle shot up with their guidance a couple quarters ago, Bloom Energy also exploded to the upside because Oracle's using the Bloom Energy natural gas fuel cells in the data centers, which is an extra green way to do things. Oracle's guidance was a little sloppy. Oracle has since consolidated here a bit. Bloom Energy got hit with that, but it's roaring back right now. And that's one of those stocks that's up 15% under 2 days. So that stock is a phenomenal buy in any dip. EGAN, it's EGAN, is the plumbing behind the AI infrastructure. So they're doing exceptionally well. AUPH is a pharmaceutical company, and they treat neuropathy in your feet and lupus. So they've got some very good products. And they're doing very well. Another stock we have is INDV. They provide substance abuse treatment. And let's face it, in the wake of what happened to Rob Reiner and his wife, that tragedy with their son, you get all kinds of things coming out now. But yeah, if you have an addiction problem, you got to get treatment. And that's what INDV does. And finally, we recommend now 15 gold stocks. Equinox is one of my favorite. But gold's just booming because the central banks are buying it. And let's face it, we have gold up over 60% for the year. We have a lot of crypto down 15 to 20% for the year. Bitcoin isn't down that much, but some other crypto is. And Ethereum would be an example. I think the crypto crowd better just switch to gold. That's my personal opinion. It's less volatile, appreciates more. You'll have better liquidity. So I think the gold boom is going to continue.
Well, we hope you all appreciate this special gift. From economic nirvana to rate cuts to crypto to some special stock picks. That's how we're going to close out this week's video. Thank you all so much for watching. We hope you have a special holiday and a very Merry Christmas. Make sure to give this video a like and subscribe if you haven't already. We'll see you all next week for a new video.